Welcome back, everyone, to Web3 Unpacked. I'm Rich Pasqua, and joining us today is Aly Madhavji, managing partner of Blockchain Founders Fund, whose goal is to empower entrepreneurs of promising blockchain and emerging technology projects with the resources they need to make their vision a reality. Welcome, Aly.
Thanks so much, Rich, for having me on the show. Excited to be here.
Yeah. And we're excited to have you because you have a really interesting background that I know, actually, our audience is really going to enjoy and get a lot out of for this episode. Some of the highlights for you, Aly, is, an interesting background in blockchain and in academia. You're an entrepreneur, blockchain and Web3 investor. You're an award-winning author, which is pretty cool. You're a consultant to the UN, a Schwartzman Scholar, and Senior Blockchain Fellow. That's a lot. And I want to, maybe afterwards I can ask you about time management, but that's impressive. And, when we jump in, before we get really into the mechanics of the fund, I want to ask you how you started your Web3 journey. It's always interesting for us to learn.
Yeah, no, it's a great question. And thanks for sort of the kind intro. Blockchain, I think, is like the bigger part. I think is it's always been at the core fundamental sort of way that I've approached things, right? And at the end of the day, I look at this as a technology that's out there building a more fair, more transparent world for everyone. And, there's a lot of problems in this world, right? And so when you look at even the way growing up and why I sort of had a very quick affinity to this space, I mean, both of my parents are refugees from East Africa. And, that's sort of the cards and what they got dealt, right? And of course, they were, lucky to be able to, find refuge in Canada, right? But from a very young age, it was, how do we sort of find these ways to create level playing fields to, make things more fair, more transparent. And that sort of led to a number of things over my career. And so you mentioned, I used to write quite a bit in my free time, published 3 books. 2 of them made it to #1 on Amazon in the education category. And, that was also about how do you build a more fair, a more sort of transparent, like level playing field across the board, right? And give more people an opportunity to succeed and sort of achieve different things. And so, that already kicked off a very strong affinity to the space. And then it ended up actually going down the rabbit hole quite early, but after a few years decided to move full time into the space. And so in basically 2016, 17, ended up moving full time into the space, started an exchange at the time. And we ended up exiting that at the end of 17, and we decided to set up Blockchain Founders Fund. Fast forward, it's now been, 6 years going on 7 there. And we've got over 110 portfolio companies. We've invested in tons of companies all across the space, wow, touching like everything from infrastructure to dev tooling to DeFi and, even aspects of like gaming and AI, very early on that blend into the space. And so all sorts of really, really cool things across the industry.
Fantastic. And yeah, I had a look at your roster, your portfolio. Impressive, and it's very diverse, which is really, really smart in this space because there's so many pockets or industries that are bubbling up and doing quite well. So, and I really, it's very interesting because your story is slightly different than a lot of the founders we've had on the show before, in the sense that your parents were refugees, right? And your interest in Web3 and blockchain is the idea of, truly democratizing the playing field, which is one of the top reasons I'm in it as well. Earning money as an investor or, dabbling in a project or working on your own projects is one thing, but really showing the real world implications of this technology, this cryptography, is pretty profound. And I always say that, you know, uh, blockchain is like blockchain technology, and this whole industry that's bubbling up right now before our eyes is like the mobile industry years ago. It didn't really start in the United States. It didn't even take off until it really had foundations in, developing nations, because they needed it and they needed the infrastructure, or they didn't have the infrastructure. And it was blockchain to me is the very same similar thing, except it flattens the playing field. So really great intro to yourself, your family, and how you got into this. Quite amazing. Now, can you, Ali, because your fund is really interesting, and like I mentioned before, it's very diverse. Can you give us a background of what it's about and who you're working with, and kind of the fundamentals of it?
Yeah, absolutely. So we started the fund back in 2017, and there's a few sort of key things, right? We see ourselves. So myself, my partner Toby as well. There's sort of three partners on the fund. We see ourselves as builders more so than investors, and it's a very different flavor. When
Mm,
we're sort of on your cap table, and so we want to be, that first place that founders think of when they're like, hey, I need help or some issue happened. We want them to call us and we help them solve it, right? Like, we're not there to scold them on stuff. We're there to be like, let's roll up our sleeves with you, figure out how to solve this and move forward and build a better, faster, stronger company together. And I think that's been very valuable and apparent. And so from the early days, we worked with founders, and we've continued to build on that. And so one of the really cool things is most of our companies will tell you that we're by far their most involved investor. I mean, we work with some pretty intense processes that we've built over the years on how to scale startups effectively. For example, when we go through our fundraising process with startups, we've got a 90-point fundraising process that we go through to actually help get our companies up to a world-class standard, right? I mean, we've spent, for example, we went through 1,000 different startup investor and advisor updates and basically built our own template, taking the best practices from all of those. We spent 3 weeks thinking about data rooms, and honestly, nobody should spend 3 weeks thinking about data rooms. And we went and figured out, how do you go perfect this so that it decreases drop-off rates, for startups when they're trying to close investors. And most startups will tell you, and founders will know this, they talk to these investors, they're really excited, and then you see 70-80% of them drop off after that call. They share some info and it drops off and they end up not investing. And so it's like, how do you go decrease that, make better use of your time, close rounds quicker, focus on building incredible products, and then, go do it again and then scale more, right? And so these are the areas where we like to get really involved and work with our startups. The very different philosophy to what you see in the space from a
mm.
lot of investors. And then, we back that up with larger and larger checks. So we just raised a new $75 million fund last year. We became one of the first Singapore regulated Web3 funds. And we go right, early checks. Typically it's about 200K into a company. And then we write larger follow-ons. So we write follow-ons up to 5 million in companies, and we, write follow-ons as quick as 60 to 90 days into companies. So we like to basically get under the hood, work with startups, then go drive growth. And if we can see things moving in the right direction, we continue to help those companies be funded and bring in other, great investors across the space.
That's great. Yeah. And I have a bunch of questions regarding investment and attracting investment later on for you. But I really like your approach and your language as far as your builders, right? You're not just, airdropping money to a company. You're invested in it. So your intellect and your personal IP and your partner's IP is extremely important to them. And it's funny, we were talking before we even got on here, and you were connecting me to like two or three people immediately. So, that is a big deal, right? So this is a new thing. We're in our infancy here, and certain teams and projects need help from other teams and projects. So connecting like people is really important. And I think that's really interesting and a fresh approach to things. So that's great. Now, we talked about your portfolio a little bit as far as being fairly diverse, I would say. Um, do you see, do you guys yourselves focus in on specific industries, or do you see specific industries bubbling up a little bit more than others, perhaps?
Yeah, so we actually probably also look at this in a different way. I think what happens oftentimes, in the investment landscape or even like in an emerging industry such as this, is like something gets hot and then everybody tries to invest in it, right? And
Hmm.
and we don't think of it like that, right? So right now, I'll give you an example. We've got 25 open sub thesis right now where we think there's major problems in the Web3 space and no market leader or an opportunity for a beachhead to sort of create a new sort of emerging player in that space. And so we then go out and we look for companies that cover these different areas. And that allows us to like understand what the problems are and then actually try to figure out who's fixing them and like can we find the right startups that we'd want to basically be part of and help back and help drive forward. And that approach has been very effective. And I think oftentimes though it's also led to criticisms, right? Which is interesting because like we're not necessarily going into what's sexy today, right? When we started investing in blockchain and gaming, I'll tell you, it was the start of 18. Nobody in the world had a thesis on blockchain and gaming. I remember the comments that we were getting. People were like, that's weird. It makes no sense. Why would you own assets in a game? Like these were the questions from some of the leading investors. Some are no longer in the space, some are, right? But like that was the questions from like leading investors that like just didn't get it yet, right? And for us, we were like, this changes everything. And the same thing happened in 19. We started investing at the intersection of AI and blockchain. And again, everyone's like, what, like, how does this make any sense? What are you going to use it for? How does this make sense when you apply AI, blockchain, and gaming together? And it just didn't make sense for a lot of people. But we were like, this changes everything in gaming. And we became one of the first investors in a company called Altered State Machine. It recently rolled up into Futureverse, which raised 54 million. It was one of the largest raises in the space over the past year. And, we launched the first AI football league with FIFA and all sorts of other things, right? And so there's a lot of things that move the needle, but like it just might not be the popular thing or the sexy thing when we do it, but it's because we're looking at like what are the actual problems and what unlocks that growth or allows the space to sort of expand and actually achieve what we think is the potential of the space.
Yeah, you brought up a lot of great points in there, and the one that really resonates with me, and I think with our audience too, is the idea of not boiling the ocean and throwing spaghetti at the walls to see what sticks. You're 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 finding the white space. You're examining the problems in the space, and as investors and builders, you're getting ahead of it, right? So gaming, obviously DeFi, there's such a focus there, but you're getting ahead of it and you're solving the problems as they're happening. So that's to me, that's a great approach. It's the only approach really, and I love that. And you're offering quite a bit to your partners, not just investment. Again, it's much more than that. Um, Now, I've been in the space for a long time, much like you, as an investor and a builder, and creating products that are solving problems. One of the greatest problems that I've had and other people have had is, where do you find the money? And not only where do you find the money, obviously you can go to VCs and people like yourself, but how do you get past that first interview? You mentioned right off the bat that first meeting, and how do you make it engaging and make it stick? Can you tell us a little bit about some of the roadblocks you see founders having when approaching investment?
Yeah, like I mean, to be honest, I think money is still like relatively cheap. Sure, the price of it has gone up, right? It's
Mm-hmm.
been more difficult as interest rates have gone up, opportunity costs have gone up, etc. But I think in reality, there's still a lot of investors in the space. There's a lot of dry powder, and everybody's looking for deals still, right? And so, we look at, just to give you some context, we look at 400 to 600 companies typically every single month, right? And it's pretty clear when startups can stand out. And to me, it's less about and we don't even care, like, for example, like who's in the round. A lot of investors like are waiting for other investors. We don't actually necessarily care. We make our own opinions. We have our own conviction. You know, people are looking at like, I mean, there's going to be different things, but like for us, it's like, the biggest thing we can measure as a VC is progress over time. So it's a formula, right? So it's how much progress are you making in as little time as possible. And if you can show us you're doing the right things and you're building in the right way and you're moving, quite fast, that we can start to figure out like, hey, do we think this is going in the right direction? That's great. This doesn't mean it's like post revenue always, right? In a lot of cases, we'll invest in companies that are pre-revenue or pre-product market fit, but it's like, in a very short time, we've seen them go like interview 30 customers, like figure out and build the product and like build out all these features and launch to beta. And we're like, hey, that's crazy fast. Like we're very impressed with that. So if you can already show those things, that's going to get your foot in the door of like getting those meetings, right? And so the first part is not how you perform in the meeting, it's actually getting the meeting, because already you're getting filtered out quite a lot before that stage. If you can get and share info, like I think that's already the big thing. I mean, if you go to, I don't know, any of these sites like Crunchbase or others, and you look up 50 startups that recently raised fundraising rounds, you'll get an idea of who's investing in the space and who's active right now and who's not. And so you have a list of people to go after. I think it's just having a very clear process, like who am I going to reach out to? What do I actually share with them? How do I communicate my key accomplishments? I find that startups are either really good at sharing like, fluff, or they actually have real accomplishments that they're not very good at sharing. And so making sure you're finding that balance of being able to like share, your key accomplishment very succinctly is important. And there's some cool, like, ways that you can do that. But I think like, even like, how do you simplify your pitch deck? Like make it 12 slides or less, or unless there's some real reason it should be longer than 12 slides, right? Like making it very clear, like longer is not necessarily always better. In most cases, it's probably worse. And then, reach out, get that sort of first investor meeting with like a quick hook. And then I think from the investor meeting, like for me, it's less about, that really polished pitch. And I think it's about a genuine founder who's gonna, who's working hard, who's very passionate about solving this problem and can show us they're doing a lot of the right things. I mean, any day I'm going to care more about what you're doing on the customer front and like building in the right way, and like either like building revenue or growth or users or whatever sort of indicators or key metrics you're looking at is going to be more important to me than like how polished is your pitch, as an example, right? I know that's not the case with every VC, but like for us, we actually want to see that the product and the traction side is more effective. And that doesn't always mean like crazy numbers or anything, but like we want to see stuff's moving in the right direction there, versus say like a very polished pitch. But we've got like our maybe differences to other VCs. I think there's some quick little things that startups can do that are really good signals. And I'll share a few of those. Like if a startup can show us they're the best at very simple things, like even if it might seem obscure, like say you're a consumer product and you've got the best branding, which I know is something that you specialize in. Like that to us is a very big deal, because we're going to be like, how does a startup already have such incredible branding? Like we need to look more into this because this is pretty impressive already, right? Like stuff that can indicate like very clear things, like a very polished deck, a very clean and organized data room. Like it doesn't sound like a lot, but it already gives us an idea that, you know what you're doing, you know what you're trying to get to, you're very clear on where you're trying to go. And if you're clear in this way, you're probably very clear on, the business front of like what objectives you're trying to get to, how you're going to get there, and what time frame, what are the sort of the ways that you're going to get there, etc. And so like already these little indicators can actually be quite valuable, even if they might not seem that relevant sort of to a lot of people.
Yeah. And, to our audience, listen up. If you're looking for VC, there's some good nuggets here to pull away from Aly here. And thank you. This is really good stuff, valuable tools for people. And being on both sides of the table, myself, I 100% agree. In the beginning of your statement is, be crisp about your objectives, tell the right story in a succinct, simplified manner. To your point, it doesn't need to be, overpacked with too much stuff that's trying almost a little too hard sometimes. Um, but being succinct and having something that people can take away with, and having kind of the sound bites in their head as they walk around or move to the next meeting or the next day or a week, that's important. Um, that could be its own show unto itself, Ollie, right there. Now, can you tell us some of the challenges, like some examples of the challenges of building a successful startup? A lot of the folks that are listening now or watching, they're entrepreneurs, either small, medium, or large, whoever they are. They're trying to jump into this world as an entrepreneur, whether you're Web 2 or Web 3. Perhaps tell us how companies fail and when others succeed. What's that ratio there? What is that?
Yeah, so I mean, it's a really good question, right? And I think there's going to be a lot of stuff you can find online around this, but I think some of the key things that we see early on in startups is like, make sure that your product's needed, right? Like, I think this is already like something that a lot of startups skip. And they're like, I think this is needed. We'll like validate that, right? We generally recommend that our startups talk to at least 30 potential customers, right? Whether that's going to be like a B2C company or B2B, like, go talk to potential users, go learn from them, figure out if they would use it, try to build the product with them if you can. Like, if it's a B2B, like, get their insights, figure out what their pain points are. It's also the best way to start selling your product if you're a B2B company, right? Like, reach out to all the key people that would buy your product and talk to them and be like, tell me about your pain points, and let them complain about them. And then be like, well, I've got the perfect solution because I've already been developing it with X, Y, and Z, and it's going to do all of those things that you complained about, right? And so it's a very effective way to sell as an early company as well. Because a lot of people do like complaining about the issues that they're having, right? If they have like some system that like never does what they want it to do, and it's not like intuitive, or, XYZ pain point, like, if you're then solving those, it makes it very easy. So make sure you're talking to potential customers, ideally at least 30, and like build off of that. I think that's like a very simple one that's already going to cut out startups focusing on things that aren't needed, that people aren't willing to pay for, etc. Then, like, I think it's just having like strong persistence, strong vision, having good mentors around you. Ideally, we're very big fans of like investor advisor updates, or like friends of the company, and like keeping people up to date that you care about, but also asking for help in those. We're big believers in transparency. We don't think that like ideas can easily be stolen, and if they can be, then you're probably not the right person to build that, right? Like, ideas are easy to come by, execution's hard. So, if you can share like what you're doing, what you're building on a monthly basis, what your goals are, what you need help with, and you're sharing that out with mentors, friends of the company, different investors you've talked to that have even like passed on the deal, like current investors, like, they'll all be there to help you, and like, they'll see this. And even if they don't respond for a while, and you're tracking your standard opens and clicks as you should as a startup, you're going to see like XYZ is always checking it. And the next time you're going to go raise, they're going to be like, these guys are great, or these gals are great, right? Like, they're sharing updates every month. They're telling me what challenges they're having. They're showing me every month they're solving these challenges. They're asking for help. They're extremely communicative. Like, these are the types of people we want to back. So like, it ends up giving you a really big advantage. It helps you compress fundraising rounds and make them easier in the future. And so like, these are the types of things that like startups, should be doing. Making sure that you are very strong on the tech side in this industry is important. Like, a very strong CTO or tech side is quite important, given this industry is a bit more like, say, tech heavy in some ways. So that's a key thing, and that's something that we look at as well. I mean, those are a few different pieces. I mean, there's going to be a lot more reasons why startups fail, but I won't go into all of them.
Right. Yeah. And again, we're just scratching the surface here. That goes deep and wide. But really, really great points. One of which you brought up is, interviewing your customers, from a user experience person myself, that is everything. And people think, oh, we're putting out this product and we're going to, query 30, 40, 50 people within our demographic and get feedback and then start. right? Well, you might find that your product is actually different, may have to become different a little bit there. And it's important for people to realize that just because you go through the due diligence during your, your initial days or your initial seed or funding days, it doesn't mean it stops. It becomes this whole dialogue becomes part of your product process. So in the beginning, the middle, and the end, or not the end, continuing, you always have to kind of ping out and, get feedback from your users who are actually maybe on your test nets or just interested in your product. And one of the other challenges that people maybe in the normie world might not see with companies, new companies, entrepreneurs, founders, products, that they have to really, because of the idea of democratization, they have to, through DAOs or Discord channels or wherever they're managing their communications with the constituents, they always have to give feedback on a regular basis. And that's really important. So the founders, like the physical, there are founders that are smart and have done really interesting things in the past. The board is real. I mean, there's tons of, just look at, what was it, 2016-ish, 17 with the ICO explosions. Everyone got rug pulled, everyone got dumped on. And it might as well have been bots putting this stuff out. It wasn't real. So the idea of real people communicating to other real people within their network is important too. So really good sage advice there, Ali. Thank you. Now, this is slightly loaded, a loaded question, and could go on for hours if we so choose. With Web3 in its infancy right now, and I consider it to be just a speck right now, right? We're just getting kicked off. We're seeing amazing progress with new protocols and tools and services being built every single day. Can you maybe give us your thoughts on what you think the future of Web3 might look like, in the next year or two, couple of years? I know it's difficult, but where's your head at with that?
Yeah, no, it's a good question. I mean, I wish I could fully predict the future, but it's kind of what we try to do, right? In
Yeah.
some ways, right? So, and this sort of, relates back to some of those, sub theses that we have internally and how we sort of look at the industry evolving. And there's all these different pathways it can go, right? And we're trying to figure out, hey, where do we think it could go? And what do we think sort of makes sense as an emerging player solving some of the bottlenecks? So the way that I look at that is going back to today, like what are some of these bottlenecks, right? And there's bottlenecks across the board, right? So take like even something that might not be that sexy, like how do you develop more effectively in this space? Like one of the challenges, if you go talk to pretty much any developer in this space, they're going to tell you they need to consistently integrate like dozens, if not hundreds of different APIs for data sources. I mean, if you have even like say integrations for data to like exchanges, let's call it, which is a pretty standard one. A lot of different companies in the space are using like say the exchange APIs, and you have 12 different exchanges integrated, and every exchange updates their API like once a year. That means every month you're now spending time for a developer to like update these APIs. So it's like all these costs that you have just going into like updating APIs all the time, and it's just like very distracting. Then you have to worry about like uptime and redundancies and like all these different things on data and like dev tooling. And so like, to be honest, so when we look at this, we're like, hey, like we need to solve some of these challenges so the industry can take off so that teams are able to focus on building like real valuable stuff instead of, just trying to like build and solve some of these challenges around like, basic APIs and connecting stuff across the industry and like building in redundancy. And so we invest in a really cool company called Uniblock that's actually built a unified API, one click of a button for any developer to turn on and off like any major tool in the space. And then they solve all the challenges around redundancy and downtime and like APIs changing and all of these things. And so now it allows any developer to be, better, faster, stronger. And we've got thousands and thousands of companies now starting to build on Uniblock. And this is actually quite game changing. And so like you have like problems that you might not think are problems, but this industry can't advance if like developers can't build effectively. And so as soon as we start like streamlining some of the different things on the dev tool side, it allows like an explosion of growth, across the industry. I mean, there's a lot of other things. I mean, we're looking at like, how does this actually go mainstream to your average person? And like, it's got to be in ways that they don't realize or think about that they're using these products, right? So we invested in a company called Breshna or Grid. And so what's really cool is they built a no-code gaming platform. And the goal is to connect anyone in the world to be able to build their own game in under 5 minutes. And these are hyper casual games, and you can use them for fun. You can use them for education and all sorts of other things. But you don't know that this is all on blockchain, right? And so they're putting all these layers on blockchain. But what's really cool is now Grid, Miriam, superstar female founder out of DC, has now built the world's first text to game engine. So now you can basically build a game with just typing what you want, right? Or even saying what you want, and it'll build you the game in like a minute. And right now there's all these different game templates like, Flappy Bird, Super Mario, Space Invaders, all these different type of education templates, etc. And what we're actually seeing is like, people all around the world are starting to make games. We were setting goals with Breshna last year on like, imagine if we could create 3,000 games in 2023. I mean, fast forward, there's hundreds of thousands of games created this year. There's millions of players a month. Like, it's just blown up over this year, and it's only just the beginning there, right? And so now imagine, anyone that's creating these templates for new games, think about like a Canva for video games, right? Like anyone that's creating templates will get incentivized. Anyone that's creating the games will get incentivized. Anyone that creates assets that get used in the games will get royalties. Anyone that like shares or promotes the games will, get essentially like affiliate fees, which are like standard across, all sorts of industries on the web and otherwise. And so now you've created this way where like anyone in the world can sort of level the playing field on hyper casual, and hyper casual is 65% of like the entire gaming market, right? When you think about it from like a revenue perspective. So like massive, massive potential here to like create something mainstream, but you don't even know that it's, needed. And there's more examples of like just real world stuff that people don't realize. I mean, I'll take one that even like I was quite surprised about, right? And I learn stuff every day about different industries. Take, the problem in the pet industry. So if you have a pet, any pet owners that are listening, you're probably more aware of this problem than I have, because I've learned a lot about this, not being a pet owner. But anyone that has a pet, you need to keep like vaccination certificates of your pet. And every time you go to a vet, a dog or cat or pet groomer, or like, any dog or pet daycare, etc., like you need to have and produce these, certificates that are in person, right? Like in paper. Sometimes they're digital, but if they're digital, they're usually on these centralized like systems that are not like fully accessible everywhere. And they have like different partner networks that you can use it at. And anyways, it's like quite complex. And so now imagine creating like, essentially like a pet ID through Petastic. You can do that now. We've put over 500,000 pets on chain in the last few months, and it's solving like a real problem that people have, but you don't need to know it's on blockchain, and it's going to change everything. And we believe that the entire industry globally needs to move on to a solution like this. And so there's this huge opportunity, and you wouldn't even know that it's all on this technology, right? And it's because blockchain is essentially solving these key multi-party trust issues. And so it's fascinating, game-changing technology that you don't need to know about as an ordinary person. Of course, there's going to be more Web3 like hyper native products that are going to be different. But I think there's a lot of really, really cool things that are maybe very different from the normal examples you'll typically hear that I'm trying to share.
A lot of great points in there, Ali. It's really interesting because we all look at the next video hosting platform or something sexy or shiny, right? But in reality, a lot of the innovation happens between these bigger protocols and some of these, what I would call bridge companies or products, like the one you were mentioning, Uniblock, which I would love to talk to, by the way. That's a very interesting, they're solving a pretty big bottleneck, a big problem for developers that I hear all the time. Oh, if I have to deal with another API or translating from this to that, it also becomes a little bit of glue and duct tape on the back end of things too. But that's super important for people to understand that the innovation is happening, on the surface and below, which is really cool. And yeah, I mean, there is so much happening right now that is hyper exciting. You just have to scratch and look for what people, to your point, what are we solving today? And that's kind of the core of everything, right? So now, as we wrap up a little bit, Aly, what because there's so many entrepreneurs out there kind of digging in and grokking as much information from podcasts and articles and databases of information. If there was one piece of information that you would give entrepreneurs right now, what would that be? Just one.
I mean,
Another loaded.
it's a loaded question. I think I'll try to get something like specific to like the time right now, right?
Yeah.
I mean, a lot of founders are telling us, and we're hearing it's the hardest time to raise. No VCs are investing. Like, there's been a pretty big pullback on this front. And I would say like two things. Like, one, focus on like building your product if you're passionate about it. Like, stay lean, of course, if you can, because like you're right, the market is tough. But two, like, I don't think that should let you down on there are no investors, because I actually think that the market right now, in some ways, is easier to raise than ever, and I'll explain why. But all investors are looking for, incredible companies that are building in this space. And there's so many investors that have a ton of dry powder because they didn't deploy a lot over the last year, and they need to basically be deploying. And so you're actually seeing more time spent with great companies right now by investors that they're interested in, like. So there is actually quite a lot of activity. I think it's actually in some ways even easier right now to get meetings with VCs than before, because basically a lot of VCs have a lot more time right now. And so they're actually meeting, and while they're being selective, they are meeting with more companies. So this is actually very helpful to get in the door. But, I think just, stay persistent, believe in what you're doing, drive and go get customers, which at the end of the day is the holy grail, right? Like, build revenues, get customers. And then, definitely don't drop off on like the fundraising side. Like, sure, the market's changed. It's not as frothy or anything as it was a year ago or a year and a half ago, 2 years ago. But at the end of the day, like, there are strong investors that'll go back what you're doing and, will help you sort of continue to get to that next stage. And, and then you can sort of keep going from there. Right.
Yeah, great advice, Aly, and thank you so much for that. And yeah, it is really important to remember that some people have backed out of the game, if you will, and you have to keep pushing forward, no matter what the industry says. It's dried up or whatnot. Yeah, it's a little lean, but I 100% agree. You not only have to keep pushing forward, you have to reopen the doors you tried to open before and keep going that way. And beyond that, you get your first rounds, maybe first or second round, if you're lucky, whatever it may be, you have to keep fundraising, right? And it's important for people to understand that for a founder, it's not like, ooh, let's brainstorm on new features and functionality all day. They're on investor calls 24/7. And you and I know that for sure. But it is possible. And persistence, right?
We do like founders that are focused on product and customers. And then on the investor front, like, one of our objectives, even when we invest in a company, is how do we actually compress this investor cycle and like this fundraise? Because like, what we don't want, like, being a founder myself previously, what we don't want is founders actually raising 24/7 all year round, because like, it is a distraction, right? So as much as we can try to compress that into like an 8-week period or something like this, helps our founders a lot. And it helps like us as a company, or like our companies, to basically achieve the goals that they're setting out, so that there is going to be a next round and a next round, and like they can continue to scale and grow.
Awesome. And again, I'll just say it again. I really like your like very strategic approach. And it's not hand holding, it's engaging. Like, you're engaged. And that's fresh, and it's definitely new for some people, but very important to this industry, because this industry is different than others, right? So yes, Very good advice. Thank you so much. Now, Ali, are you going to be at a conference soon? Or are you hosting anything, any live events virtually or IRL that you want to push out there?
I mean, across our team, we're always speaking and at different conferences. I mean, our team's spread out across Southeast Asia. We're always at events, across North America, across the Middle East, Europe, and Asia. And so you can find us. Just follow any of our team members across social media, follow our company on social media, and you'll get an idea of where we are. But definitely, if you are building a startup in the space, reach out to us. Doesn't matter if you feel like you're too early or there's no other investors in. We oftentimes go into companies that, maybe in situations where they haven't raised from other investors yet or anything like that. So definitely reach out. You can reach out to me on any of my social medias, or even just on our company website. You can share info with us. We do look at every single company that shares info with us. So excited to hear from you.
Awesome. And again, thank you so much for great advice, by the way, and just sharing a little bit about yourself and your company and the fun. So thank you for joining us.
My pleasure.